Hey, this is Paul with your Bold Profits Daily. Today, I want to give you an update on the stock market because, as you know, if you are watching the stock market, that it is down, down, down. And many of you are probably wondering what you should do. Should you panic? Should you sell everything? Should you hold on? Or if you're one of these folks that keeps a little cash on the side because you've seen that there have been scare stories in 2011 about the euro, in 2014 and 15 about the China crash, in 2016 it was something else, and last year it was something else. And in truth, since the stock market started going up in 2009, there has always been a scary story to get you to sell. And then later on, when markets are higher, you're on the outside looking in, thinking of all that money that could have been yours if you simply had stayed in. So today I want to give you a market update and give you 3 reasons why you should stay in the market. And if you have some money, you should go ahead and put some of that money in. So here are my 3 reasons. Number 1, the boogeyman of the stock market is really resting. And what's the boogeyman? The boogeyman of the stock market is always interest rates. If interest rates are rising and going to skyrocket higher, well, that's a major problem for the stock market. Why? Just think, if your savings account is going to give you 6%, 8%, 10%, 12%, would you bother to invest any money in the stock market where you have to deal with days like today, where the stock market is down 2% and where you're worried, is my 401k going to go to zero? What will happen to the stock market tomorrow? Who needs that? No one needs that. So if your savings account is going to give you even 6%, my guess is a lot of people are just going to sell their stocks and put their money in the savings account and say, forget about this. And so when you look at interest rates, the person who sets interest rates in the United States is the chairman of the Federal Reserve. His name is Jay Powell. And he has gone on record to say essentially that he thinks interest rates where they are today are just right and that they are going to do nothing. And that's because they see little to no inflation. And the economy is going on where even though there's low unemployment, there's no real pressure on wages or costs, which are the ultimate drivers of inflation. So in other words, everything that really matters for interest rates to go up is really very calm, very stable, and setting up where in such a way that it might stay this way for 5, 7, even 10 years, perhaps even longer. And that leads me to reason number 2. And you've heard me talk about this if you watch our Bold Profits on Monday, which is that productivity is rising in the United States. And what's productivity? You might be thinking, wow, Paul, productivity. This sounds like a kind of made up thing. Nope, it's a big, big, big deal. If you go back and read history books of any sort, productivity is the primary critical reason for the advancement of all human society. It is the critical reason for the advancement of this country, why we have leapfrogged over other countries and become one of the most prosperous, wealthy countries in the world. And that is essentially that we are able to do more with less. That's what productivity is. In other words, whereas before it might take you 20 hours to make something, now as a result of some technique that you've invented, some machine that you can now use, what would take you 20 hours now takes you 5. Or where you could only make 20 in 1 hour, you can now make 50. So We can do more with less, and that's productivity. And that hit the highest number since 2010. So it's almost 10 years. And even if you go back to really the 1990s, we have seen stagnant productivity for a very long time. There was just a little burst of it in the late 90s. However, since then, it's really done nothing. However, productivity is now on a rising trend, on a rising track, and that is what is going to help keep inflation low. In other words, we can get more with less, and that means even if employers have to pay more for wages, we can make more with less, and as a result, you don't get that money bidding up prices. So inflation stays low, interest rates stay low, and it's because of rising productivity. Third reason, and this is more direct to what is going on today, which is that the stocks that really deserve to go down today are the stocks that I would tell you are associated with the last great boom, which really had nothing to do with the United States. It was a global boom, driven a lot by China and to some extent by India and other global countries. And it was about them sort of building their country out and about them exporting things to the United States and to Europe. And that's how they built their countries up. And these are companies like Caterpillar. These are commodity companies that make copper and iron ore. These are the companies that are going to be very affected if the way that we conduct trade in the future is different, and where we have a much higher threshold for what we will allow into our country, and also for reciprocating. In other words, we also want other countries to open up their markets so our companies can sell their stuff fairly without their intellectual property being stolen, or in other words, many unfair practices that have now developed over really 15, 20 years of really the old boom. And those companies, I believe, are the companies of the old for the most part. And it's really part of my complete old versus new thesis way of thinking of the world. And you'll see from this chart here, which was put out by FactSet, that they cut the companies up in the S&P 500 by those that get more than 50% of their revenue or sales from international and global sources, and those that get less than 50%. And you can see that there is a big difference. In other words, already just from about a year of all of this trade war stuff going on, there is a large and growing difference in terms of the companies that have a large global exposure in terms of their sales growth and those that do. And I tell you all the time, sales growth is what matters, because if you can't sell, well, you have nothing. You can't have cash flow. You can't have anything without sales. So in other words, if you stick to the companies that really have a lot less global exposure, you're going to do great. Now, there's a lot of companies in the S&P 500 and the overall stock market that really have significant exposure to the United States, to disruptification, to the ways of the new, that you can benefit by owning any of the big major indices, the NASDAQ, the S&P 500. However, this is my shameless plug. If you want a laser focus on what is going on, where the kind of thinking that I'm telling you about, where we're vetting companies for the new, for disruptification, for the big mega trends that are really driving productivity, Internet of Things, blockchain, artificial intelligence, robotics, precision medicine, new energy, the rise of the millennial generation, you really want to check into my Profits Unlimited service, my Extreme Fortune service, my True Momentum service. These are the base services where we go across the US stock market, large cap stocks and Profits Unlimited, mid cap stocks and True Momentum, small cap stocks and Extreme Fortunes. And there you can get this laser focus on the companies that are going to benefit from everything I'm telling you about. Now, if you want to buy an ETF that will get you in We've told you before to buy the ARK Innovation ETF. The ticker symbol is ARKK. So that will also give you a nice diversified exposure to many of the things and many of the developments I've told you about in this Bold Profits Daily. Before I go, I want to tell you to subscribe to this channel, share it, like, and comment, and I'll have another one for you next week. Until then, this is Paul saying bye.